And shoot! Welcome back to another video, guys. This is the Diversify YouTube channel and my name is Manu, and the goal for this channel is to increase financial awareness and education about investing. I wanted to do a shorter video today, a 5-minute introduction to ETFs, a strategy for investments which is wildly popular right now. Broadly speaking, I want to go over what ETFs are, what the returns can be, what the risks are, and also how you can actually invest in ETFs. So an ETF stands for an exchange traded fund, which is essentially a fund which trades on an exchange, pretty much exactly what it sounds like. And that fund invests in a certain basket of assets. So think stocks. Instead of investing in one stock, you can invest in this basket. So it'll be composed of, say, 100 stocks. If you take the UK stock market, for example, the FTSE 100 is an index of the 100 largest firms in the UK. So you can track the price movements of all 100 companies using one single ETF. The idea is to diversify the risk of any single company, the idiosyncratic risk associated with one stock away. So for example, a company like HSBC might have an issue going on and the stock price might dip, but your portfolio would be relatively unaffected because you've invested in 100 stocks at once. So even if the share price halves, the effect on your portfolio would be minimal because you've invested in an ETF that's composed of 100 stocks. Similarly, if you invested in the S&P 500, which is the US version of that, the 500 biggest companies in the US, you won't be hit as hard if a stock falls. The drawback of this strategy is that while you will avoid those big dips in your portfolio because of a single stock crashing, you'll also miss some of the highs that happen if a stock rises. For example, the S&P 500 has risen on average 13.6% every year over the last 10 years, which is a bit higher than its long-term average. But if some stocks like Tesla in 1 year, last year 2020 start to now like an 800% rise. So but then again, from January to now, Tesla stock has dipped about 36%. So you can see that it's all about timing when it comes to investing in individual stocks. But if you are more of a long-term investor and you want to stay passive and you don't want to track the markets every day, an ETF can be an amazing strategy for you. In general, if you can get your money to grow at 10% every year rather than keeping it in the bank account, especially at today's rates, which are very low, if you can get it to grow at around 10% every year, that's going to take your income a lot further in the long run. And this is a very safe way to do it. You can also have a thematic approach to ETFs, so investing in ETFs that are environmentally friendly, ESG compliant, so companies that do good for the world and have a good governance structure and things like that. Some of these ETFs, some of these thematic ETFs have done really well. So over the last 5 years, a 200% return in the iShares Global Clean Energy ETF, for example. Overall, ETFs are a great way for beginner investors and also people that don't have a lot of time to watch the markets every single day to passively make returns of the improvement of the overall economy rather than letting your money sit in a bank account and getting a very low interest rate on that money. Some popular fintech apps that currently allow you to invest in ETFs are Plum, Moneybox, Nutmeg. Pretty much any investment app would allow you to invest in ETFs, and you can also approach your bank or brokerage to start an account and invest today. Well, that's all for today, guys. Let me know what you think of this style of presentation, quick 5-minute digestible content, and it'll be far more frequent in this way because the editing process is a lot quicker for me. I hope this video has been useful, guys. The world of ETFs is large, it's growing, and there's so much to learn, so go out there and get it. Remember, the only way to know if it's the right style for you is to go and actually try it out. Always do your own research before you approach any investments, and I wish you the best of luck. See you in a bit.